EPF contribution of employer 15% and EPF contribution of employee 10% of the gross salary of the employees, and given ETF contribution of employer 5% of the gross salary of the employees, and given if the gross salary of the employees of the business, it has given 800,000. Think business point of view, this is the total salary, total gross salary. Therefore, for EPF, both employee and employer give their contribution. For EPF, both employee and employer give their contribution. EPF divide by two parts. Employee contribution. Employee, it has given 10%. As well as employer contribution, both employee and employer give their contribution. Therefore, employer contribution equal 15%. And ETF also given. ETF only employer give their contribution. ETF only employer give their contribution. Therefore, employee trust fund, ETF, only employer give their contribution. Employer mean workers. Employer given percentage here 5%. Think how to adjust EPF and ETF. And given gross salary of the employees also given. Gross salary of the employees in the business point of view, it has given. Think EPF and ETF divide by two parts. EPF both employee and employer give their contribution, but ETF only employer give their contribution. Value should be calculated based on gross salary of the employees. It has given gross salary also 800,000. Therefore, take the value also 800,000 into 10%. Try to calculate employee contribution. It is given 10% based on gross salary. Value equal 8,000. As well as employer contribution, also 800,000 into 50%. Therefore, value equal 120,000. ETF only employer give their contribution. Also should be calculated based on gross salary and given percentage 5%. Therefore, here value equal 40,000. Now think how to record in the business point of view. Think contribution of employee should be deduct from gross salary. Balance part paid in cash. It has given gross salary. Gross salary is given. Gross salary of the employees. Value equal 800,000. But when business going to pay salary to the employee, EPF contribution of employee should be deduct from gross salary. Therefore, EPF employee contribution should be deduct from gross salary. Balance part paid in cash. Therefore, think how much paid in cash as salary. Contribution of employee already calculated. Therefore, from gross salary, deduct contribution of employee. It is called net salary. Therefore, think how to calculate net salary. Only deduct contribution of employee. Therefore, from gross salary, deduct contribution of employee. Value equal net salary. Here 720,000. That is a value paid in cash as a salary. Think how to record in the business point of view. This is the way you have to calculate net salary. From gross salary, deduct EPF contribution of employee. Answer is net salary. Think how to record in the business point of view. Then prepare the ledger account also. Prepare the ledger accounts. Normally, you have to prepare salary accounts. Salary accounts. As well as you have to prepare cash accounts. Salary account, cash accounts. As well as EPF expense accounts and EPF payable accounts. EPF contribution of employee effect for EPF expense accounts. As well as EPF payable accounts. And ETF also available. Therefore, two ledger account for ETF, ETF expense account as well as ETF payable accounts. There are 6 ledger accounts. Think it has not given trial balance. It means those are not recorded yet. Therefore, step number 1, net salary should be recorded. This is step number 1. Net salary 720,000. That is a value paid in cash. Therefore, step number 1. This is the step number 1. Net salary should be recorded. Paid in cash. Therefore, what is the double entry? Cash account credit, salary account debit. Therefore, you have to prepare salary account as well as cash accounts. This is salary accounts. Salary and paid in cash. Therefore, it is effective for cash account also. Salary account and cash accounts. Think double entry. Paid in cash 720,000. Effect for cash decrease. Therefore, cash account credit as a salary and salary account credit as a cash. Cash account credit as a salary. Value equals 720,000. As well as salary account debit as a cash. Name of other ledger account, description. Value 720,000. This is step number 1. Net salary paid in cash. And second step, EPF contribution of employee. This is step number 2. Therefore, this is step number 2. Contribution of employee should be recorded. Step number 2. That is also part of salary. Therefore, salary account debit, EPF payable account credit. That value should be transferred to the central bank. Therefore, name of ledger accounts, EPF payable. EPF payable. Think contribution of employee double entry. Contribution of employee equal 80,000. That is also part of salary. Therefore, salary account debit, EPF payable account credit. Therefore, salary account debit as EPF payable. As EPF payable. As EPF payable. Think salary account debit. Therefore, value equal contribution of employee 80,000. EPF payable account credit as a salary. EPF payable account credit as a salary. Value equal 8,000. Think what is the double entry contribution of employee. Step number 1, net salary paid in cash. And second one, contribution of employee, also part of salary. Salary account debit, EPF payable account credit. Then EPF contribution of employer, that is the third steps. This is step number 3. Step number 3. This is third steps. Contribution of employer, part of salary. Therefore, salary account debit, EPF payable account credit. So, contribution of employee is not part of salary. This one not paid for salary accounts. Therefore, this is another expense. EPF expense account debit, EPF payable account credit. Therefore, separate ledger account you have to prepare as EPF expense. EPF expense account debit, EPF payable account credit. Therefore, 120,000 EPF expense account debit, EPF expense account debit as EPF payable, EPF expense account debit 120,000 value. That is a contribution of employer, another expense, and EPF payable account also credit, EPF payable account credit as EPF expense. Contribution of employer, another expense. Therefore, think salary account debit, EPF expense account debit, EPF payable account credit. And ETF contribution of employer, employee trust fund, only employer give their contribution. Therefore, ETF expense account debit, ETF payable account credit. It is not effect for salary. Contribution of employer, another expense. Therefore, ETF expense accounts, as well as you have to prepare ETF payable accounts. ETF payable. Think contribution of employee value equal 40,000. Expense account debit. Therefore, ETF expense account debit as ETF payable. Name of other ledger accounts. ETF payable as ETF payable. Think ETF expense account debit value equal 40,000 and ETF payable account credit as ETF expense. As ETF expense value equal 40,000. Therefore, this is the way you have to record EPF and ETF. Now think how to disclose on the financial statement. This is the fourth step, and this is the third step. Think about step numbers also. There are 4 steps to be applied normally. 4 steps to be applied. Four steps. First one, contribution of employer. First one, net salary. This is step number 1. And second one, EPF contribution of employee. Therefore, here value equal based on gross salary 10%. It has calculated. Therefore, value equal 80,000. This is the second steps. This is second steps. Step number 2. Normally there are 4 steps to be applied. Normally there are 4 steps to be applied. And third step, contribution of employer. Step number 3. As well as step number 4, contribution of employer for ETF. Now think how to disclose on the financial statement. Salaries expense should be included under administration expense. Therefore, salary account should be closed. Take debit side total amounts. Salary account should be closed. Take the debit side total amounts and take that value other sides. Therefore, difference value as income statement. Therefore, debit side total amount equal 800,000. Take that value other side and difference value as income statement. Therefore, here as income statement or profit and loss accounts. 800,000 should be included under administration expense. Any organization, it may be sole proprietorships, partnership, company, any organization. As well as EPF expense also same way. Think about EPF expense accounts. EPF expense account value equal 120,000 also should be included income statement. Difference value as a profit and loss. Therefore, here as a profit and loss or income statement. Difference value also equal 120,000. It should be considered as expense under administration expense any organization. Think expense accounts as well as ETF also same way. ETF also debit side total money equal 40,000. Take that value credit side. Then difference value also 40,000 as income statement. As a profit and loss accounts. Therefore, profit and loss account value equal 40,000. There are 3 expenses relevant for employees. Employee related expense. Think about salary, EPF expense as well as ETF expense. Those values should be included in the income statement under administration expense. As well as EPF payable account and ETF payable account, those are liability accounts. Therefore, EPF payable and ETF payable balance should be carried down. Balance carried down. Therefore, credit side increase, take total value credit side. Credit side total value equal to 1,000 and take that value debit side. Take that value debit side to 1,000 and difference value as a balance carried down. Those are liability. Therefore, here balance carried down and value equal same value to 1,000. Balance carried down. It should be included as a balance brought forward credit side. Liability as a balance brought forward credit side. Any organization, that value should be included under current liability. Therefore, think about EPF payable accounts. Debit side increase. So credit side increase. Take that value debit side. Difference value as a balance carried out. Under current liability. ETF payable also same way. ETF payable, credit side increase, all the payable account. All the payable accounts liability. Therefore, balance should be carried out. credit side increase, take that value debit side, therefore difference value as a balance carried down. Value equal 40,000. And it should be include credit side as a balance brought forward. Think how to calculate closing balance also. Balance brought forward also equal 40,000. Think EPF and ETF adjustment very important. All the business organization employees, therefore this adjustment they ask definitely in the paper. Therefore think EPF, those are fund maintained by the central bank based on salary each and every month. For EPF, both employee and employer give their contribution, but ETF, only employer give their contribution. Value should be calculated based on gross salary. Then think how it records. Think net salary how to calculate. Only contribution of employee should be deducted from net salary, gross salary. Then net salary can be calculated. That is a value paid in cash. Cash account credit, salary account debit. Think about step number 1. Cash account credit, salary account debit. Then contribution of employee, part of salary, salary account debit, EPF payable account credit. After that, contribution of employer for EPF, it is another expense, cannot be deducted from salary, EPF expense account debit, EPF payable account credit. And ETF also only give their contribution by the employer, another expense, not part of salary, EPF expense account debit, EPF payable account credit. Therefore, normally 4 steps should be applied. It has not given trial balance. It means those are not recorded. This is the way you have to record EPF and ETF adjustment. Any organization it has given, present all the business organization available employees, you have to know how to disclose on the financial statement. Therefore, salary, EPF expense and ETF expense under administration expense, as well as EPF payable and ETF payable under current liability as a liability.